Thank you for the opportunity to see this new day. Thank you for the opportunity you have given unto us to share knowledge. We pray, O God, for divine wisdom, divine understanding, and a sharp memory above all. We lift our instructor into your hands. We ask, O God, that you will use him, O God, to impart every needed knowledge that we'll need to go through this exam successfully. We thank you and we bless you in Jesus' name. Amen.
Amen. Okay. So we'll first look at the May 2015 paper. Do you have the May 2015 question on flexible budget? Do you have it?
Yes, sir.
Sir.
Hello, please respond to me. You are about 10. When I ask
Yes,
questions, talk.
Hurry
So I
up.
will know. The title is Monster Company. Do you have it?
So on the site, we don't
And the
have
site is not there.
On the site, it's not there.
So that is why I'm asking you. So I was expecting that when I issue the message, you don't have it, you will tell me. I have a way of extracting it for you. That's why I'm asking the question. So you should know that is why I'm asking. Okay, so let me give the question to you. Write it. Write the question. ICA May 2015. This is the budgeted and actual result. The budgeted and actual results. The budgeted and actual results of Monster Company Limited. I think why I picked this question from, they changed the name, but what matters is the substance. Monster Company Limited for September 2015. For September 2015 were as follows. I think where I picked this question from, they've edited it slightly. So let's use this. So all of you, you just copy this and let's use it. The company uses marginal costing system. The company uses marginal costing system. There were no opening and closing inventories. There were no opening and closing inventories. There were no opening and closing inventories. So this is the result. We call this one fixed budget. Fixed budget, then you divide it into two. Then you call this one to actual results. Actual results. And you also divide it into two. So the fixed budget the fixed budget is on 1,000 units. It's on 1,000 units. And then the actual result is on 700 units. Then we come and say sales. This was 30,000 into 1,200. Then we have variable costs. Variable costs. Under the variable costs, we have direct material. This is variable overheads. This is variable overheads.
Recording in progress.
So I'm continuing here. I'm continuing here. So you have contribution. You have contribution, and the contribution is 12,000. So write it right under the 18,000. That is right. Sorry. Right under the 18,000, 12,000. And then the other side is 8,000. Right under the 18,000. Then the less fixed cost. Then the less fixed cost. 10,000 right under the 12,000. Less fixed cost of 10,000 right under the 12,000. And then here to 10,400 right under the 800. Then you get this 8,600. 8,600. Take note. Then you get 1,800 loss. And then this is 2,000. So put this down. So put this down. Let's take the question. Are you following? Please, are you following?
Yes, please.
Yes, sure.
Hello, sir.
Yes.
So please, the new site where you started writing, you mentioned it's under, is it the first column or
Oh, you could
the
see,
second
you should
column?
know this. You should know this. 30,000 minus 18,000 will give you 12,000. So you see that it's under the second column. They are
Okay, sir.
balancing it off. They are balancing it off.
Thank
It's under the second column where the 18,000 and the 12,000 is. When you strike, the contribution will give you 12,000 and 8,600. Yes, David. David, what's the problem?
Oh, I've already spoken. Thank you.
Are you okay?
Yes, please.
Yes, please.
Okay, then the required. Prepare a budget that will be useful. Required. It says prepare a budget. Prepare a budget that will be useful. Prepare a budget that will be useful for management control purpose. For management control purpose. For management control purpose, and briefly comment. On the company's performance. And briefly comment on the company's performance in September 2015. In September 2015. So something like this. Are we okay?
Yeah.
Are we okay?
Yes, please.
Yes, please.
Okay, so this is the idea behind the flexed or flexible budget. When we say a flexed or a flexible budget, what it means is that it is a budget that adjusts the fixed budget. It is a budget that adjusts the fixed budget to reflect the actual level of activity. Level of activity. So it is a budget that adjusts the fixed budget to reflect the actual level of activity, i.e., a budget that provides a more meaningful means of assessing performance. Using the actual level of activity. It shows what the fixed budget, it shows what the fixed budget should have been if the actual level of activity was known. So that is when they use the word flexed. If they use the word flexed, then it means it's a past tense. So we go like this. But if they use flexible, then it means it's continuous. So since it's continuous, we will say that it is a budget that provides similar expectation at different levels of activity. At different levels of activity during the period. For example, while a fixed budget may be prepared for 2,000 units, of production, the budget could be expanded to provide similar budgets for several levels of activity. Such as 1,000 units, 1,200 units, 1,500 units, etc. So this is known as the flexible budget. So take note of the theory. What I mean is that the word flex, if you see the word flex, it means adjust. When you say flex, it means adjust. So if they use the past tense that flexed, if they say the budget has been flexed, it means that they did it after the end of the period. Are you getting the point?
Yes, please.
Are you getting the point?
Yes, sir.
If they use the word flexed, the past tense, it means they did it at the end of the period. But if they use the word flexible, it means they did it at the beginning of the period to show several levels of activity. Are you getting the point? So what we mean is that, you see, at the beginning of the period, the company will prepare its budget. So at that point, management have a certain expectation of level of production they want to achieve. Have you written the theory? So I'll go and explain it. Have you written it?
Yeah,
Yes.
so it could be expanded to.
Yes, please.
Could be what? Expanded to provide similar budgets. It could be expanded to provide similar budget for several levels of activity. Are you getting it?
Yes, please.
Such as 1,000 units, 1,200 units, 1,500 units, etc. This is known as flexible budget. Are we okay?
Yes.
Are we okay?
Yes,
Yes.
please.
So let me explain. Now, I'm saying that at the beginning of the period, let's say when we're starting the period, beginning of the period, management conceived that they want to produce 2,000 units. This is what they targeted. And so because this is what they targeted, they will produce a budget for the 2,000 units. They will produce a budget for the 2,000 units. This budget is what we call the fixed budget. Are you getting the point? That is what we call the fixed budget. But at the end of the period, we realized that maybe due to certain eventualities that happened, we couldn't produce 2,000 units, and we actually produced 1,500 units. Now, the question is that, can you use the results of the budget covering 2,000 units to assess the performance of a manager who produced 1,500 units?
No.
Can you do that?
No.
Oh,
No.
please.
So for example, the fixed budget was looking like this. For example, the fixed budget, because you wanted to produce 2,000 units, you were saying that your revenue should be, let's say, 10,000. Direct material, your direct material, you were expecting 4,000. Your direct labor, you were expecting 2,000. Your variable overheads, you were expecting 1,000. And then your fixed overheads, you were expecting 1,500. So all your costs, you were expecting 6, 7, 8,000. You were expecting cost of 8,500. So your net profit, you were expecting 1,500. Now here is the case, the actual results that came, it was on 1,500 units. So you only produced and sold 1,500. Now, when you produced and sold 1,500, this is the revenue you got. You got revenue of 9,000 here. Then direct material, you got 3,000. Direct labor, you got 1,200. Variable overhead, you got 750. And then fixed overheads, you got 2,000. So your total cost became So your total cost became 6,950. And then your net profit became 2,050. Now, these were the actual results. What we are saying is that, can you use this fixed budget? Can you use this fixed budget to assess the performance of a manager who did this? Can you use the fixed budget to judge the performance of the manager? Can you do that?
No, please.
No, please.
It will not be appropriate. Why will it not be appropriate? Because the basis of measurement are not the same. Are you getting the point?
Yeah.
Yes.
Yes. We believe that in life, should you try assessing two people, you have to put them on the same basis of measurement, provide them the same resources. Then when there is difference in performance, you can get a realistic meaning to explain the difference in performance. Are you getting the point?
Yes, sir.
Yes.
Yes. I have been taken to, a government basic school, and you have been taken to a private school, high-class private school. At the end of the day, we all finished GSS 3. Then you who was going to a high-class private school, you got grade 8. Me who was going to a government basic school, I got grade 12. Can you say that the one who got aggregate 8 has performed than the one who got aggregate 12? Not necessarily, because the basis of measurement and the resources were not the same. If somebody can go to a government school and then be able to get grade 8, and you go to a top class private school, grade 12, and you go to a top class private school and you get grade 8, what it means that this person is more efficient than you. But on the face of the results, your results is looking better. What it means is that if they had provided him the same result, probably they had also taken him to a very big private school over the period. All the books that they bought for you, they bought the same for him. In fact, your parents even gave you money for some extracurricular activities and all that. If he was giving the same, do you think he won't reduce this 12 to an aggregate less than 8, sometimes maybe 6 or 7? Are you getting the point?
Yeah.
Are you getting the point?
Yes.
Yes.
So
Yes, sir.
in reality, you will see that the one who is getting a grade 12, he has a high IQ by the one getting grade 8. But because of the difference in resources, is giving difference in performance. And so what am I saying? I am saying that before you assess a manager's performance using a budget, then you must make sure that the basis of measurement, which is the units of production, they must be the same. So what you will do is that you will adjust this budget to reflect 1,500 units. Because the actual production was 1,500 units, you will then adjust this budget to reflect what the budget should have been if we knew we were producing 1,500 units. Then when you get that result, now it's 1,500, 1,500. So you can compare. Are you getting the point?
Yes.
So at the end of the period, when I want to measure performance, I'll come and do what we call the flex budget. So in getting the flex budget, all the variable costs, revenue and the variable cost, I'll find their values in per unit form. So I'll say that the selling price per unit will be, now what did the revenue give us? In the fixed budget, the revenue was 10,000 and the number of units was 2,000. So it means that we have 10,000 cedis divided by 2,000 units. Is that clear?
Yes.
Meaning they used a selling price of 5. That was what they budgeted. Direct material per unit. Direct material per unit. What was the direct material? What was the cost of the direct material? 4,000. So 4,000 divided by 2,000 units, which will give us what? 2 cedis per unit.
Yeah.
Direct labor per unit will also give us 2,000 divided by 2,000 units.
1 cedi.
I believe we are all following.
Yeah.
1 cedi.
Yes, sir.
Then variable overheads per unit, also giving us what? Yes, 1,000 divided by 2,000 units, giving us what? 0.5.
Yeah. 50%.
Then as for the fixed cost, it is the same.
Yes.
The fixed overhead gives us what? 1,500. So the fixed cost is 1,500 bulky. Now, if I want to prepare the flexed budget, then I'll now say that, let me put it this way. Now, these are the company's details. Let me say these are the company's details. And this is what the fixed budget is giving us. The fixed budget, which was on 2,000 units. Then I'll adjust the fixed budget to give me the flexed, which I'll call the flexed budget. So the flexed budget should be on 1,500 units, which was actually produced. Are you getting it?
Yeah.
Before I put down the actual results, so at the end of the day, when I take revenue, let me copy the fixed and actual first. The fixed was 10,004 to 1,005. So the revenue was 10,000. This was 4,000. This was 2,000. This was
1,000.
1,000 and then 1,500.
Yeah.
1,000 and then 1,500. So this was the cost: direct material, direct labor, variable overheads, fixed overheads. At the end of the day, the total cost here was what? 8,500.
Yes.
And so the net profit, the net profit was what? 1,500. Let's copy the actual results. Let's copy the actual results to 93,250. 93,200, 750, and I what? 2,000. And I give us 6,950. 950. And I get the profit for it.
2,050.
2,050. So this is the fixed and actual. Now to get the flexed budget, the actual was on 1,500 units. So we flexed the 2,000 units back to 1,005. Are you following?
Yeah.
Are we following?
Yes, please.
Hey, is there only one person online? The rest of you, let me know.
Please. We are
Are you following what you are doing?
Yes, sir.
Yes.
So if I'm looking for the flex budget, for the revenue, I know there is a selling price of 5 cedis, and I'm now adjusting it to 1,500 units. So multiply 5 cedis by 1,500, it will give you 7,500. Are we getting it?
Yes.
Direct material was 2 cedis. Multiply by the 1,500, it will give you 3,000.
3,000.
Direct labor was 1 cedi. Multiply by the 1,500, it will give you 1,500. Direct expenses was variable overhead was 0.5. Multiply by the 1,500, it will give you 750. And then the fixed cost will still be 1,500 according to the budget. So this will give us 6,750. And so the net profit will give us 750. So this is actually what the budget should have been. Now, if I have flexed the budget to this level, then I can now compare performance, because in comparing performance for revenue, I can say per the 1,500 units we produce, we are expecting you to get a revenue of 7,500, but you actually got 9,000. Have you done well or you have failed?
You've done well.
You've done well. So that's where we get the variance. So the variance will be the difference between the flex budget and the actual budget. So you've done well by what? 1,500. That means 1,500. We call it favorable. Are you getting the point?
Yes. Yeah.
Now, this is a cost, direct material. You were expecting a cost of 3,000 and you actually incurred 3,000. It means that you have not done well, you have not failed. So nil. Direct labor. You were expecting a cost of 1,500, but you actually incurred 1,200. Have you done well or you failed?
Favorable.
So we've done well by 300. Favorable. Direct labor. Direct variable overhead. I was expecting a cost of 750 and I actually incurred 750. It means there is no result. Fixed overhead. I was expecting a cost of 1,500 and I actually incurred 2,000. Have I done well or I failed?
500.
Failed.
Are failed by 500. So 500 at best. This is what we call the flexed budget. That means that at the end of the period, it adjusts the fixed budget to reflect the actual level of production. Are you getting the point? So this budget provides a meaningful basis to be able to compare the performance of what managers. In other words, it shows what the fixed budget should have been if the actual level of activity was produced. Are you getting the point?
Yes, sir.
Yes.
So now you get the theory I wrote for the flex budget. You now understand. I said if they use the word flexed, then you say it is a budget that adjusts the fixed budget to reflect the actual level of activity. That is a budget that provides a more meaningful means of assessing performance using the level of activity, the actual level of activity. It shows what the fixed budget should have been if the actual level of activity was known. Are you okay now?
Yes, sir.
Yes, sir.
Now, if they use the word flexible, it means that it is continuous. So what the flexible means is that this same fixed budget of 2,000, produce the same budget at different levels of activity. Are you getting the point?
Yes, sir.
So it means that you are not flexing it directly to 1,005, but you have this. You have the fixed budget. You have the fixed budget. The fixed budget will be on 2,000 units at the beginning. Then the company will say, okay, assuming I don't produce 2,000 and I produce 1,800, what would the results be? If I'm not able to produce 1,800 and I produce 1,500, what would the results be? If I can't produce 1,500 and I produce 1,000, what would the results be? So that budget will look like this. So that budget will look like this. Right from the beginning of the period, the budget will look like this. You will see revenue. So you have revenue for 2,000, 1,008, 1,005, and 1,000. Direct material, you have it for this, and that. Are you getting the point?
Yeah.
Direct labor. You have it for different levels of activity. So meaning the company is trying to tell you that if we produce 2,000, this is the results we should incur. But if we are not able to produce 2,000 and we produce 1,008, we should see this. If we produce 1,005, we should see this. If we produce 1,000, we should see this. When this happens, we say this is what? Flexible. Are you getting the point?
Yes, sir.
Are you getting the point?
Yes, sir.
Flexible.
Yes,
Meaning
sir.
that it is providing the budget for different levels of activity. But so this one is prepared at the beginning of the period. Are you getting the point?
Yeah.
So the difference between the flexed and flexible budget is that, so let's say differences between the flexed and flexible. You see how I'm wasting time on this theory. I'm trying to communicate something to you. I'm not a magician. If you go to the exam hall and then they ask you to briefly explain the difference between a flex budget and a flexible budget for some 5 marks, then they give you a calculation for some 15 marks or 10 marks, and you can't take that marks, and there's a wara. So now, differences between the flexed and flexible budget. One, what do we say? The flexed budget is prepared at the end of the period. True or false?
True.
At the end of the period, to show what the results should have been. What the results should have been based on the actual level of activity. Whereas the flexible budget is produced when? Flexible budget is produced when?
At the beginning.
Very good. It's produced at the beginning. At the beginning of the period to show results expected at what? Different levels of what?
Activity.
Of activity. So that's the first difference. Then the second difference too is that the flex budget adjusts the fixed budget to only the actual level of production. So that one, it adjusts it to only one level. Is that clear? So the flexed budget, it adjusts the fixed budget to only the actual level of activity. That one, it will adjust it to only one level. But then the flexible will adjust it to what? Several levels. Are you getting the point? Are we getting the
Yeah.
point?
Yes,
So
please.
one is prepared at the beginning, one is prepared at the end. The other is prepared to show only what the results of the actual production should be. But the other one is prepared to show results of different levels of activity. I think I have explained that. So you know what the flexible or flex budget is. Now let's go back to our question in November 2015, May 2015. Can we go back to the question?
Yes.
So in going back to the question, this is the question. And then they are saying the budgeted and actual results of Monster Limited for September 2015 were as follows. The company uses marginal costing system. There were no opening and closing inventories. So they've given you the fixed budget. This is the results for the fixed budget. And this is the results for the actual budget. So you could see that the fixed budget is on 1,000 units. The actual result is on 700 units. So what must you do first? You must select this to show it in per unit form. Are you getting the point?
Yes, please.
You must find the per unit form of all this. So you can start work by yourself. So you can start from find the per unit form of all these. So since you have the question, guide me and then let's see. So the May 2015, where I picked the question from, they will change the words and the figures by the same thing. So first of all, the basis of the flex budget, calculate all in per unit. So the revenue, that's selling price per unit. What's the revenue there?
30,000.
So 30,000 divided by what?
1,000.
1,000, eh?
Yes.
So divided by 1,000 units. And I'll give you what?
30.
3 cities.
30
cities.
Now, direct material per unit. What was the direct material cost?
10,000.
10,000. So when you divide it by the 1,000 units, what are we getting? Give me what?
10 cities.
10 cities.
Then direct labor per unit. What is it giving you?
5,000, 1,000. So 5 cities.
Here we go, 5 cities. Variable overhead per unit.
3,000 divided by 1,000.
3,000 divided by what? 1,000 units.
3 cities.
Giving you 3 cities per unit. Then the fixed overhead. That one is in bulk. How much is the fixed overhead?
The fixed overhead is 10,000.
That one is in bulk, 10,000. So now, if you want to flex, you will now come. Remember, they said the company is using marginal costing. So you now come and say, Monster Company Limited. And it's a flexed budget for the period September 2015. So let's take the details here. Then let's take the fixed budget, which is based on the 1,000 units. Then flex it and get a flexed which is on, so the flex should be on the 700 units, right?
Yes, please.
Then take the actual result, which is also on the 700 units. Then now you calculate the difference, which we call the variance.
Yes.
So let's see. Yes, revenue. So first, copy the fixed, and then the actual. The revenue for the fixed was what, 30,000, eh?
Yes, please.
1,000.
Direct material was what?
10,000.
10,000. Direct labor,
5,000.
5,000. Variable overheads,
3,000.
5,000.
3,000.
3,000.
3,000.
Okay. So since we are using marginal costing, it means we have to add the variable costs and get contribution first. Is that clear?
Yes, please.
So this will give us what?
12,000.
18,000. Now, if I take the 18,000 out of the revenue, I'll get contribution of what?
12,000.
Contribution of 12,000. Then I less the fixed cost. How much was the fixed cost?
It was 10,000.
Giving me a net profit of what? 2,000.
Yes, please.
Okay. So give me the actual results to copy the actual result. Mention the actual results from revenue was what?
21,200.
21,200. Direct material,
6,000.
direct labor,
3,800.
variable overhead.
2,200.
So the total here is what?
12,000.
12,000. When I take it out, contribution gives me what?
8,600.
8,600.
9,200.
Okay.
9,200.
8,600. So the fixed cost, what's the fixed cost?
10,400.
10,000. But how come? You said this one give you what? 12,000. Okay. How come the contribution was 8,600?
It should be 9,200.
9,200.
I think we didn't copy.
We didn't calculate it well.
We
Okay.
just
Okay, so 9,200. And then what was the fixed cost?
first cost was 10,400.
10,400. When we take it out, what was the loss?
Should have been 1,200 or
It should have been
1,200.
1,200.
200. Yes.
Let me check the question whether I copy it right.
Okay.
It's true. Correct it. This was 6,600. This was 6,600. Please
Okay.
correct it from the question. That was 6,600. So that's where that difference is coming from. It was 6,600. So correct it from the question. Please, in your actual results, correct the question here. It was, everybody watch here. Correct
Okay.
this question. It was
So it will be
6,600. So this one gives you
Okay.
12,600. That's why this became 8,600. Is that clear?
Okay.
So correct it. And so, yes, so this one, the total will now give you what? 12,600, right? And then the contribution will be 8,600. So minus 10,400, giving you what?
1,800.
Okay, now let's prepare our flex budget. Now the revenue, selling price per unit, we got what? 30. So 30
Yes,
times 700. 30 times 700 will give you what? 21,000. Right?
Yes.
Direct material give us what? 10 cities, right?
2 cities.
Times 700 will give you what? 7,000.
Yeah.
Direct labor give you what? 5
5
cities.
cities.
Times
5
700 will be 3,500.
100.
Variable overhead give us what? 3
3
cities. times 700 is what?
2,100.
So the total of this will give you 3,500 plus 2,100 will give you what? 12,600.
600.
So contribution will give us what?
Saying
400.
it's 400.
400, right? And then the
Yes.
fixed cost should be the same as the budgeted 10,000. At the end of this will be 1,600 loss. Are you getting it?
Yes, please.
Now let's look at the variance. So in calculating the variance, you now compare the flex budget to the actual result and not the fixed budget. So for revenue, I was expected to generate revenue of 21,000, but I got 21,200. Have I done well or I failed?
Yeah.
Have I done well or I failed?
You've done well.
You've done well.
So 200 favorable. Here is a cost, so be careful. I was supposed to incur cost of 7,000, but I actually incurred 6,600. I think I've done well by 400.
That's yeah.
I was expecting cost of 3,500, and I incurred 3,800. I
300.
failed by 300, so 300 adverse. I was expecting cost of 2,100, and I incurred 2,200. I failed by 100. So add all this 400 and 400. This will give you nil. So this will still give you 200 favorable. Can you see?
Yes.
Contribution. I was expecting fixed cost. So I was expecting a cost of 10,000 and I incurred 10,400. What has happened? I have failed by what? 400. Now I succeeded by 200 and later I failed by 400. That would be a failure of what? 200. So it should show here. I was expecting a loss of 1,600 and I actually got a loss of 1,800. It means I failed by 200. Can you see?
Yes, sir.
Yes.
So it should show. This is what we call the flex budget. Then the question was actually that you should now comment on performance. So commenting on performance, you go here and say comment on performance. So comments on performance. Now let's see. So tackle it one after the other. The revenue, it was 200 favorable. So we just explained that revenue, one, the managers have been effective in revenue generation. Effective in revenue generation. Do you get a point? Did you see? Yes. The actual revenue exceeded the target by what? 200 cedis. Are you getting it? Are you getting it?
Yes, sir.
Yes, please.
Then you just give brief comments. Number two, let's see the ones which are the cost. Normally the cost, the ones that are favorable, you don't talk so much about it. It's the adverse ones. The adverse ones are the problem. That's what you address. Direct labor and variable value. So if I say managers have not been efficient in managing direct labor cost. In managing direct labor cost. Yes, actual cost of labor exceeded the target by what? It exceeded the target by how much? By what? 300, eh?
300.
By 300 cedis. You don't stop there. Then you give us reasons. What could be the possible reason? If you incur more labor cost than they were expecting, what could be the possible reason? Then you will say possible reasons could be why. If you are a manager, bring your head to the house. Management accounting, that's it. To be a good management accounting student, bring your issues home and ask yourself, if you were the manager, what would you do? What will happen? What will happen for you to incur more labor cost? What do you think happened there? Before your labor cost will increase, it means that It could be the use of skilled labor. Maybe you use highly skilled labor. Use of highly skilled labor that attracted high wages. Are you getting it?
Yes, please.
That attracted higher wages. Or the introduction of incentives. Are you getting it?
Yes.
Or the introduction of incentives. I'm using this to open your eyes to variance. So that when we get to variance and they're asking you to give possible causes of the variance, you won't be quiet. So the introduction of incentives such as what? Such as bonuses and what? Overtime. Are you getting it?
Yes.
These are the reasons why you incur more money, labor cost. Then 3, overheads. You say overhead cost also exceeded the target. Now, what will happen for overheads to exceed the target? Overheads, what do you think it could be? Yes, it will say that. Yes, inefficient use of utilities. Are you getting the point?
Okay.
Such as electricity and water. Are you getting it?
Yeah.
You see, I want you to bring your head to the house. Management account is not book knowledge. Rare life situation. Your overheads. If your overheads increase, what do you think it might be? If you are not using electricity and light well, you close work, you leave the gadgets on. You go to some offices, you will see that they've closed. Yet air conditioning is on for the next 2 hours before security man will come and put it off. All those ones are cost. Are you getting the point?
Yes.
Before the month will end, it has accumulated. So inefficient use of utilities such as electricity and water. Are you getting it? Or possible increase in maintenance costs. In maintenance cost of machinery. Maintenance cost of machinery. If your machine is obsolete due to obsolescence, if your machine is obsolete, you will be maintaining it more often, and so you incur more maintenance cost. Are you getting it?
Yes.
This could be the possible reasons. Then, 4, the fixed cost. Now, as for fixed costs, 10,000, it became 10,400. How can fixed costs increase? How can fixed costs increase? Even 1,000, what do you call it? How can the fixed cost increase? Even when it was 1,000, they were expecting 10,000. And when it became 700, rather, they've gotten 10,400. It means that, yes, that was improper planning. Do you get the point?
Yeah.
Fixed cost is like rent. The rent you've rented for the room, which you are paying fixed. You were expecting 10,000 and it became 10,400, even for a lesser unit produced. So that one, you cannot say the management has not been efficient. It could be due to poor planning or inaccurate information. Are you getting it?
Yeah.
Are you getting the point?
Yes, please.
So you say increase in fixed costs of what? 400 cedis could be attributed to improper planning or inaccurate information at the time of preparing the budget. At the time of preparing the budget. So you can say rent costs, etc. may have been increased without the knowledge of management at the beginning of the planning period. Are you getting it? Are you getting it?
Yeah.
Meaning that at the time they were going to prepare the budget, some of these costs have increased. They didn't know. So that could be the possible reason. So you see, when ICA gives you a question and then they are saying calculate and comment on the performance, don't think you want to get the question easy. So the comment, then you go and write anything at all, expecting that they will mark for you. If you write anything at all, you will get anything at all. Are you getting the point? Are you listening carefully to me?
Yes, sir.
Yes, boss.
Yes, sir.
The rest who have muted themselves, Cynthia and Co, Cynthia, Swansea, David, Eben Bruce, Isaac Oforibuedu, Jiba, and then the rest who have been quiet. They have muted themselves, Sadat, Reina, Sam, Makafui, and the rest. Are you listening or you muted yourself, meaning you are not part of the class?
You are listening. You
Yeah,
are listening.
listening.
Okay, so that is the game. Don't go and write anything at all, expecting that the marks will just be given. The marks are not for free in the exam hall. You have to earn it. And in fact, before you earn that mark, you must sweat. So go and sweat well and come out well. Don't go and write the paper comfortably. Then by the time the results will come, then you start cursing us. As for the curses, we've received it and now we ourselves, we don't know what to do again. You go and write exams, you didn't learn well, and results come, then you are cursing the examiner. What has that got to do with me? Someone will say, oh, 48 again. So these examiners couldn't just consider. The marks is not for consideration. They are earned on merit. So it's because of the cases now we have introduced that you can come and pay and watch your paper so that you go and revoke your cases. You know, now the gods too, they are not taking snap and things again. Okay? They are taking perfume rice and that kind of thing. So if you want to curse, they must be ready. Now, if you want to curse, the gods, they are taking washing machine and air conditions. Are you done?
Yes, sir.
Those who have been taking yes, somebody is calling. Yes, I'm listening. Those who have been taking your screenshots, so we can give you this. We can give you from here so that you take your screenshots. Our mothers who have been taking their screenshots, you can work from here. Can we go?
Yes.
Can we go?
Yes,
Those taking
please.
the screenshot, deal with it. Okay, so this same question. Now, this same question. Assuming they told you you should provide a budget that will provide a more realistic meaning on a flexible budget. If they used the word flexible, what would you have done? All you would have done is that you will still calculate the fixed budget in per unit form. Then you would have done this. You would have said the flexible budget. If they had used the word flexible, you would have done this. You would have taken the details. Then you prepare for the 1,000 units, which was fixed. It means that you should adjust it to different levels. The actual was 700, right?
Yes.
So I can prepare for, let's say, 200 units. I can prepare for, let's say, 500 units. At least two of them will be okay. Then I prepare for, let's say, 700 units. So that one, there is nothing like actual, something like this. Do you get the point? So the same budget, I'll roll it for 1,000, prepare it for 200, 500, and 700. This is what we call the flexible. Are you getting the point?
Yes.
Are you getting the point?
Yes.
And so if you don't listen to the question carefully, somebody will see the question, they say on a flexible budget basis. Then you will go and flex it to the actual, just like that, and leave it. Yes, they'll mark it for you, but you won't get the full marks. Because definitely the actual will also be there. Are you getting the point? You must show one column for the actual too. Are you getting the point? So you will get it, but you won't get the full mark. They'll ask you, where is your other levels? 200 and 500, where are them? Remember, the term means flexible, so it should be at different levels. But if it is flexed, then that one is only one level, which is the actual. Are you getting the point?
Yeah.
So, say, are you the one who is going to divide it into flexible, or the
Yes.
question?
No, the question will tell you. If the question says on a flexible budget basis, that means they are asking you to choose several levels of activity. So you can assume some levels of activity and put it there.
Okay.
Do you get the point?
Yes, sir.
Okay. So that is the question. Now let's look at the same flex and flexible budget. In the questions I gave to you, I listed some. What is it? I listed some. I said Today we'll take care of what and what. November 2019, question 2. So the next one is November 2019. So take your November 2019, question 2. You will see interesting things there. November 2019, question 2. Can we move on?
Yes, please.
Yes, November 2019. Have you taken the question?
Yes. Management accounting are often engaged in decision-making process.
Yes. Question 2. What did they say?
It says management account.
So leave the A. Look at the 2B. The 2B.
Okay, the following monthly budgeted cost values have been taken from the budget working paper of MZ Limited for the year ended 30th September 2019. So activity level, we have the 75%, 85%, and 95%.
Now, clearly, hold on. So clearly, they said the following monthly budgeted costs have been taken from the working papers, and you have different activity levels, 75, 85, 95. So immediately you see that if you are a student who have learned, what comes into your mind? What are they going to talk about?
It's a flexible budget.
Flexible.
So you see what learning can do, flexible. Then look at the requirements. It says prepare a budgetary control statement for MZ Limited on a flexible budget basis for the month of September 2019. And you will see what happened here. Now, the one who was chosen to present the one who was chosen to actually present the solution, he also made the same obvious mistake. He also provided for a flexed instead of a flexible. And this thing I've drawn, I don't know why the secretaries there are very, very lazy. I've drawn their attention to correct this thing. I've corrected it and sent it to them. Correct it on the website. They are still not. They are not working and taking money. Sometimes. So let's go and deal with it. Now, during May 2019, the actual cost for activity level of 82% were as what follows. Required. It says to prepare a budgetary control statement for MZ Limited. Okay, so we will go and do that. But then the trick in this question, the students didn't see is that look at the activity levels, the details there. Direct material. You know, direct material is a variable cost, right?
Yes.
Yes, sir.
Yes.
So divide, check the variability, check whether indeed it's variable. The 75%, divide 9375 by 75 and let's see. 9375. If we divide by 75, what does it give you?
125.
So 125. Check the 85%, whether it's still 125.
125.
The 85% is also 125. Check the 95% too.
Same 125.
So you can see that direct material is purely variable, direct labor is purely variable, direct expense is purely variable. But the production overhead, look at the production overhead. Even though the cost is changing, suggesting that it is variable, check if the change is uniform. 6,200 divided by 75 is giving us what?
82.67.
82.67. Good. Divide the 85% level to and see.
88.24.
So do you see that they are different?
Yes.
Can you see they are different?
Yes.
Hey, this particular question is technical, so the rest of you who are not responding, open your eyes. I can see about only 3 people being active. I don't teach a class who will just be quiet and be listening to me. You have to contribute so that I will understand your level of thinking.
Sure.
Okay. So what happens is that you can see the production overhead. It is looking variable, but the variability is not uniform. Is that it?
Yes.
Yes.
And so because it is not uniform, it means it is a semi-variable cost. There is an element of fixed cost in it.
Yes,
And so you have to separate it. You have to separate it into variable and fixed cost. And that's called the high-low method. Is that clear?
Yes.
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 So you see, the question is examining flexible budget, but they've hidden high-low in it. Those who solve the question will come out of the exam and say, oh, it is easy, oh, it is easy. There is no sugar in the question, which is making it sweet. Oh. You have to think well. Other than that, you've deviated. And so what happens is that you will see that you can choose any of the levels. So I can say at 75% level, or I can choose it at all levels and say direct material, so the flexible budget. So in the flexible budget, can say direct material per unit, yes, at 75% level, it will give me what? 9375 over
over
75.
that is
Giving me what?
125.
125, eh?
125.
Yeah.
At 85% level, give me what?
10,625
Over
over
85.
85.
Giving you what?
Still 125.
125.
Yes.
At 95% level,
11,875
125.
over what?
over 95. 95.
Also giving what? 125.
125.
125.
So I'll say direct. So direct material cost is what?
That fixed.
Variable. If you can see clearly that it's variable in the exam, so you don't need to show this, but because I'm teaching you, I'm using it to explain to you. So direct labor is also what? Variable, right?
Yes.
Direct labor cost and what? And direct expenses. And direct expenses are what? Variable cost. So it will start the work. You can just say direct material, direct labor, and direct expenses and variable and direct expenses are variable costs.
Yeah.
But then the production overhead. So the production overhead.
Yes, I don't know.
You must first test the variability. That at 75%, at 75% level, the variability is what? Give me the figure. 6,200
6,200
over 75. Give me what?
82.6. So let's say 83.
82.6.
67.
7.
At 85% level.
7,500 divided by 85.
Give me what?
88.24.
88.24. At 95% level. At 95% level.
7,000.
Divided by 95. Give me what?
73.68.
0.68. So then you say that production overhead cost is what?
Variable.
Variable.
So if you need to separate it, then you say using the high-low method.
Yeah, you pick.
So using the high-low method. So we can take the cost and then the percentage level. Let me go it this way. High and then low. So the high is at 95%. At 95%, what was the cost?
For
7,000.
7,000.
Then the low level is 75%. What was the cost?
6,200.
6,200.
6,200. Okay.
When we find the difference,
1,220.
is 1,200 and then what? 20. Are you getting it?
Yes.
So there, the variable cost per unit for that level will be what? 1,200 divided by 20. Is that clear?
Yes, sir.
So the difference is 800 or 1,002.
Sorry, I think it's 800 there.
Yes, please.
Oh.
800. Yeah, 800.
800. Okay, let's be careful with our calculations. So normally in the exam, so if you make such error, you will not know. So let's be careful.
Yeah.
So 800. 800 divided by what? 20.
40
Giving
cedis.
you
40
what?
cedis.
So that's
40.
40 cedis per percentage, right?
Yeah.
Yes.
Now let's look for the fixed cost. So using high level, let's use high level. High level of 95% for at 95%, the cost was what? 7,000.
7,000.
for 7,000 cedis. Yes, the variable cost will be the 40 cedis per percentage times 95%. Is that clear?
Yeah.
Plus a certain fixed cost, which I don't know. Give
No.
me the total cost of what?
7,000.
Give me a total cost per 7,000. What is 40 times 95?
800.
3,800.
8,800.
So 3,800 plus a certain fixed cost gives me 7,000. So the fixed cost will be 7,000 minus what?
3,800.
Which will give me 3,400,
200.
right?
Yes.
Yes.
Okay, so now I can go ahead. Let's check the next cost, whether it is also truly variable.
Bon.
The next cost is what? Selling overhead. Yes, so check the selling overhead too. Selling overhead. Yes, at 75% level. Give me the figures.
10,000.
10,000
For
by 75.
At 85% level.
11,000.
It's 11,000 by 85.
At 95% level.
12,000.
Mm-hmm.
Divided by 95.
85.
Give me the figures.
First one, 75 level is 173.3.
173.3. And this is
129.
29.41.
And this is
6 times 3.
That one is 126.32.
6.32.
32.
Yeah.
Yes.
so it means
At
that
75.
Mm-hmm.
It's
Which one?
133.33.
It's 133.33.
Please. Normally, these things, what happens is that most of the calculators we are using, they are outmoded. They are kept long. So they once a while they give us wrong results. So buy new calculators. So sometimes when you are marking, you will see a student's result and you realize that this student has actually worked, but one figure he quoted wrong, he has used that figure throughout. What do? So
there is another.
You see that?
You say?
It's 133.33.
Yeah.
Okay, so selling overhead cost is what? Semi-variable.
Yeah.
Mm-hmm.
Using high and low.
Hello?
You can hear you.
Yeah.
Yes, my friend, we'll start at exactly 6:30. So just wait for me. 6:30 we'll start, eh?
Mm-hmm.
Sorry, I was talking to somebody on the call. So you see, whatever I do for you from 4 to 6, I will do the same for another group of people from 6:30 to 8:30. So you see, if I'm doing all this and you claim you are busy that you can't learn, then you know why if you fail, you deserve it. You understand? So you don't go and be cursing. This time if you want to curse, send a plasma TV there. So selling overhead cost is semi-variable. Now let's use high-low. So using high-low method. Yes, let's take the cost and the percentage level, high and low. High level is 95% at a cost of what? 12,000.
12,000.
Low level is 75% at a cost of what?
10,000.
10,000.
2,000.
The difference. 2,000 for what?
20.
So at that level, the variable cost per unit will be what?
2,000.
Divided by what?
Divided by 20.
Giving you what?
100.
100 per what? Per percentage, right?
Yes.
Let's use the high level to look for the fixed cost. So using high level of 95% at a cost of what? 12,000.
Yes.
The variable cost will be 100 times 95 giving you 9,500, right?
Yes.
Yeah.
Plus the certain fixed cost, which I don't know, give me the total cost of what?
12,000.
12,000. So clearly, my fixed cost becomes what? 12,000 minus what? 9,500. Giving you what?
2,500.
2,000.
500.
So I've gotten that one too. And so now, yes, the last cost.
Admin.
Admin
Administration
overhead.
So you can see that admin is what? Fixed, right?
Yes.
Can you see that admin is fixed?
Yes.
173.2.
Is what? Fixed. So once I've established this, I can now prepare the flexible budget. So I can say MZ. I can now say MZ Limited. Yes, budgetary control statement on flexible budget basis. On flexible budget basis for September what? 2016, eh?
2019.
2019.
So when I take my details, I'm going to prepare for, so you can choose any two of them, just that you should show the actual. The actual is 82%. So I can prepare for, since I have the 75%, I can take 75%. Then I can take, let's say, 85%.
Then
Do you get it?
the 82.
Then the 82%. You can take just two of them, it's okay. Are you getting the point?
Yes,
Yeah.
please.
Please, do you understand now?
Yes.
Yes.
Okay, so let's see. Direct material. So you copy first. Copy the 75 and 85 first. Mention for me. 393
75.
against
10,000.
what?
10,625.
Direct labor
11,250.
11,250.
against what?
12,750.
12,750.
Direct expenses
4,860.
4,875.
against what?
Against
5,525.
And their
production of
production overhead. Please,
6,200.
please and please, when you meet questions of this nature, use double page to produce your budget. Are you getting me?
Okay.
Yes.
Open the page into two and leave the margins out and open it. Don't squeeze the paper. Open the page into two and leave the margins out and prepare it. Is that clear?
Okay.
Yeah.
Production overhead 6,200 against what?
7,500.
Then we are selling overhead. Selling overhead.
10,000 against 11,000.
Then admin
18,000. 18.
18.
13.
13.
And 13.
Okay. Now 82%. So let's see. Direct material, what do we get in the per unit? Direct material, we got what? 125, eh?
Yes, please.
So 125. So it means 125 times 82, right?
Yes, sir.
Which will give you 10,250. Are you following?
Yeah.
Yeah.
Direct labor. Check the per unit for me.
Oh.
Direct labor 11,250 divided by 75. 11,250 divided
It
by
was
75.
150.
150. So the 150 then times 82. I'm getting 12,300. Did you get that?
Yes.
Okay.
Yes.
You check the variable cost per unit, then you multiply by the 82. Did you get that?
Yes,
Yes,
sir.
please.
Yes, sir.
Direct expenses, check. 4,875 divided by 75. I'm getting 65 times
65
82.
by 80.
It's giving me 5,330.
5.
330.
Now, the production overhead, when we calculated here, the variable cost was what? The production overhead, we
330.
did it here. The variable cost per unit was 40, right? Right?
Okay. Yes.
It means 40 times 82. So 40 times 82 gives you what? 3,280, right? Then you add the fixed cost of 3,200. Are you getting it?
Yes, sir.
Watch, the
Yes, sir.
variable cost is 40. So you say let me say at 82%, for example. This is how you calculate it. You multiply the 40 by 82 to give you the variable cost. Then you
Plus.
add the fixed cost of 3,200. Is that clear?
Yes,
Yes,
please.
Yes,
sir.
sir.
I'm getting 6480. Are you getting it?
Yes,
Yes,
sir.
sir.
Yes, sir.
So 6480. Do the same for selling overhead. Selling overhead, the variable cost was what? 100%. Right? So let's say at the 82% level, 100 cedis times 82. This will give you the variable cost. Then you add the fixed cost of what? 2,500. Is that clear?
Yes, sir.
Please, do you understand?
Yes, sir.
Yes.
So that will give you
Yes.
10,700.
700.
And then the fixed
Yes,
cost
sir.
is 13,000. Eh?
Yeah.
I mean, the fixed cost there is 13,000. Right? Are we getting it?
Yes, sir.
Yes.
Good. The question didn't ask you to calculate variances. Are you getting it? Are you getting the point?
Yes.
So,
Yes, sir.
but since it didn't ask you to calculate variance, but he used the word. He used the word what? Yes, he used the word what? Budgetary control statement. Are you getting the point?
Yeah.
So once they use the word control, controlling means comparing budgeted results with actual results, investigating the variances. Are you getting the point? Hello?
Yes, sir.
Yes.
The question did not ask you to calculate variance, but in management accounting, when they tell you control means comparing the budgeted results to the actual results. You get it? Then investigating the variances. So it means that you've gotten this. You also need to provide the actual. Since you used the word control, it means you still have to provide the actual and then the variance. Are you getting it?
Yes.
So go and copy the actual. The actual that is there. Mention them for me.
10,500.
10,500.
12,250.
12,250.
5,600.
5,600.
6,250.
6,250.
15,150.
15,150.
14,200.
14,200. Then you calculate the variances. So that is it. Then you calculate the variances beside it. So my page is small, but we can still. So let's get the variances here. So such question, when you are working it, use double page. Is that clear? You open the page double, then you leave the margins out. Are you getting the point? Are we listening?
Yes, sir.
Use double page and leave the margins out. So calculate the variance. These are our costs. So the first one, what will it give you? 10,250 minus 10,500 will give you what? I was supposed to incur 10,250 and I incurred 10,500. So that's 250 negative, right?
Yes, sir.
Yes.
So 250 adverse. The second one,
12.
we're supposed to incur 12,300 and we incurred 12,250. So we've made a 50 positive, right?
Yes.
Yes.
So 50 favorable. The next one, we're supposed to incur 5,330 and we incur 5,600. So what's the difference? We
270.
have failed. We
270.
have failed by 270. So 270 adverse. The next one, we're supposed to incur 6480, and we incurred 6250. So we have succeeded by what? 230.
30.
230 favorable. The next one, yes, we're supposed to incur cost of 10,700, and we incurred 15,150. So we have failed by what? 4,450, right?
450.
Yes, sir.
450.
So 4,450 adverse. Then the next one, we're supposed to incur cost of 13,000, and we actually incurred 14,200. So we have failed by what?
1,002.
1,002.
Adverse. So that is it. So the mistakes that I believe students might have made here was some didn't know that since it was flexible budgets, they are supposed to show different activity levels. Others too didn't know that by using the word budgetary control in management accounting, if you look at CIMA, the Chartered Institute of Management Accountants, they define management accounting as an internal accounting technique that uses financial and non-financial information. Now, look at this. And I always tell students to take note of this. Look at how CIMA defines management accounting. The Chartered Institute of Management Accountants, CIMA, they define management accounting as, watch something carefully. As you prepare for your exams, it should give you a clue what this. They said it is an internal accounting technique. Internal accounting technique that uses financial and non-financial information. It's a financial and non-financial information from business to assist managers in, they said, to assist managers in planning, decision making, and controlling for the short term, medium, and long term. Please, who is that? Who is that? If your background is not good, mute it. If your background is not good, mute yourself. Be disciplined. If you know your background is not good, you mute it. Now, look at how CIMA defines management accounting. It says that it is an internal accounting technique that uses financial and non-financial information from business to assist managers in what? Planning, decision-making, and controlling for the short term, medium, and long term. Now, internal accounting technique means that the strategies used to develop reports are developed internally within the company. Are you getting it? Internally. It means that company A's strategy may be different from company B, but at the end of the day, they will all end up getting the same result. Are you listening?
Yes.
Yes, please.
What it means is that in the exams, when they give you a question, your approach can be different from another student's approach. But if you have all done the right thing, at the end of the day, you must get the same result. Are you getting the point?
Sure.
Yes.
That is why lecturers normally tell you that management accounting has no formula. You've been hearing that, right? It has no formula. It means that you can do yours using a different approach. Someone can do his using another approach. But at the end of the day, if you have all used the principles of variable cost, fixed cost, and the rest, your result must be the same. So bear in mind that if you see somebody sitting by you in the exam hall and you are busy copying the person because his work is looking different than yours, they may be different, but the results may be the same. All will be marked. So if you've learned well, prepare, have confidence, and then go and do your work. Financial and non-financial information, meaning that it goes beyond financial reporting. You will use the financial information like sales revenue, cost of sales, gross profit, return on capital employed, and all that. But you also need non-financial information. Now, non-financial information is also what we call qualitative information. That's qualitative issues. So you should expect that in your exams, you are not only going to answer questions on calculations. There will be some theoretical areas that they will ask you to explain. Are you getting it now?
Yes, please.
So do you see why your management accounting paper, sometimes they frustrate you with theories? You have not read the theories, then you'll be failing them. Have you gotten a clear picture now?
Yes, sir.
Yeah.
You will meet questions where they will ask you, for example, in this particular November 2019 question, funny enough, they ask students that they should tell non-financial performance non-financial performance measures for a passenger railway service. Passenger railway service, like a company who is running a railway line and they have trains going up and down. They say you should give 3 non-financial information that we can use to measure their performance. What will you say? What will you say? Madam, yes, I'm calling all of you. Yes, Sadat, Bukwe Joseph, Charlotte Ajate, Cynthia, David, Bruce, Emmanuel Asari, and co. I'm talking to all of you. They say you should give non-financial performance measures of a passenger railway. If you are going to board a train, apart from the price, which is financial, what other issues do you look at to choose between one and the other? What other issues? Give me.
Customer satisfaction.
Customer satisfaction is a broad thing, though. Just be specific. Customer satisfaction, it includes so much. We can look at percentage of repeat customers. Are you getting it?
Yeah.
Percentage of repeat customers. That if you see that their customers keep on returning, it tells you that they are doing something well. Is that right?
Yeah.
So you explain that loyalty is important. Loyalty is important to the customers. That is one. Number two, somebody to look at the time of arrival and departure. Time of arrival and departure. Is it that the train, they will tell me 6 o'clock and I'll come and sit down at 6 o'clock and the train will move at 8 o'clock? You see that kind of frustration?
Yes.
If you tell me departure time is 6 o'clock, now was 6 o'clock, but the train will move after 8. Look at the frustration. You will sit in the train with the heat and all that. It also parts. So the time of arrival and departure can show their performance. Number three, I can talk about serenity and comfort of the inner perimeter. Do you get the point?
Yes.
Yes.
If the train, imagine you are sitting in a train and they have DSTV in it. If you are going long distance, you don't even think. And that is what you see when you look at the buses that have been going long distance. Some of the trot drivers who go long distance, they are even good than the STC and then VVIP drivers. Or you are not aware. You are not aware that some of the ordinary trot, their drivers are even more skillful than these VVIP and then OA travel and tour entities. Some of these trot drivers, you don't trust them. They are more even skillful. Hardly will you join trot going to Kumasi and get an accident. The drivers are so skillful. Look at Okada. The people who drive private motor by themselves, and the Okada drivers who have been getting more accidents. You see that the private people, they are not experienced. But look at the Okada drivers. They can pass you through a small corner. You'll be shocked how they manage to pass it. They are very, very, very skillful. But why don't people patronize the private trot? They like the VVIP and the rest. Why? Because their seats are comfortable. When you sit in, they have televisions, they are showing movies. Imagine you are traveling from Accra to the northern region. This long distance, I'm going to stay overnight. If there is a nice TV in there showing movies and things, at least it will keep me occupied. Are you getting the point?
Yes, sir.
Yeah.
That is it. So serenity and comfort of the inner perimeter. Somebody can also talk about the nature of ticketing. Is it that I can sit in my house and go online and buy the ticket? Maybe if I want to buy the ticket, even if I'm in class learning, I can just go online, pay with Momo and generate my ticket. Then maybe I have to travel somewhere and go and queue before I get a ticket. And that is one problem. That is one problem of VVIP. They have still not learned. They are not innovative at all. You go to Circle. When you want to travel long distance, you go to Circle and you have to queue to buy the ticket. You see what I'm talking about?
Yeah.
Does it make sense? Up to now, they should even have an app. That you can be on your phone. If you want to travel Thursday night, you just write Thursday night. Maybe your time of arrival is, let's say, 8 o'clock. Then, it gives you your ticket. You pay with mobile money and then you just download your ticket. So when you go, You just show the downloaded ticket to them that my ticket now is 84. Then they give you the chance that you go and see. In the Western world, they don't do this. In the US and UK and things, you don't struggle to get bus tickets. Here,
I think VIP has the online section.
they have it.
Yeah, they have it. VIP.
Oh, then it's not popular because you go there, people queue, or myself, I'm not aware that they have an online system.
Yeah, VIP, they have it.
At the end of the day, they make their assist. That is why they behave like that. At the end of the day, I'm sure they take their time.
Exactly. So you see, what we are talking about is this: the nature of what? Ticketing. Do they even offer refreshment and then all that? These are non-financial issues that keeps the business growing. So you should expect that as you are going to write the exams, don't only focus on the calculation. There will be questions that will require you to explain theoretically and give non-financial information. Know that. So financial and non-financial information addressed. Now, planning, decision-making, and control. Are you surprised that in the management accounting question, there is a question on budgeting? That is the planning. Budgeting, this is what we call planning. If you don't see budgeting, you will see things on benchmarking, balance scorecard, and then the rest. This thing, contemporary
just in
issues.
time.
Yes, contemporary issues. It also has to do with planning. So that is planning. Then decision making. That is why you see a question on short-term decision making. Are you following now?
Yes.
Short-term decision making, the make or buy decision, deleting or dropping a segment, limiting factor decision. Those things, there will definitely be a question from there. Then controlling. Controlling is what you call variance analysis. I hope now you understand how they said the question.
Yes.
Controlling is variance analysis. So whether you like it or not, standard costing and variance analysis, you will have something from there. Then short-term, medium-term, and long-term, meaning there will be a question where you have to work, and then the results is only for a year. The statement is only for a year. That's why sometimes they tell you, prepare a budget for the first quarter. Prepare this for the month. That is short-term. Then medium, there will be a question where you provide for 2 or 3 years, 2 to 3 to 5 years. That is medium. Then long-term. So you realize that first, you see, first investment appraisal was in management accounting where you calculate NPV, internal rate of return for the long term. Do you remember?
Yes.
Do you remember? Now they've taken it out and sent it to financial management. But public sector, this thing, what do you call it? Management accounting in the public sector, it has some NPV and things in that takes care of the long term. Are you getting the point?
Yes.
The last topic they've modified, management accounting in the public sector. So the investment appraiser, they have not thoroughly taken it out. Are you aware?
Yes.
They have not thoroughly taken it out. They've modified it and made it management accounting in the public sector. Sometimes they'll tell you should prepare a cost-benefit analysis. You have to use NPV. And so it's the same thing they are examining through the back door. So this is how the paper goes. And so you should be aware that as I'm going to the hall, I'm going to face financial and non-financial information. Some of the financial questions they'll ask you are these performance evaluation, ratios and the thing. They are all there. We will see all those things before you go. By next week, we are going to begin with decision making, short-term decision making, where you will see dropping a segment, make or buy decision, special order decision, limiting factor decision, cost volume profits, both single product and multiple product CVP. You will see all those things. From there, we will come to variance analysis, where you will see basic variances, work back variance, you will see mix and yield variance, then you will see sales mix variance. All those things will be tackled well. So when you go and sit down, at least, if not for anything at all, the 50 BA, nobody in my class should be a casualty. No, at least the 50, because you are attending your various classes, you are being taught. I'm sure your lecturers will teach you well, they will discuss all these things, and you have an extra time, train you. The strategy of Prof is that they brought me in to help you with this rush hour because they know if they ask you to go and solve past questions as practice, you won't even find the time to do it. You will say you don't have time. You will say you don't have time to do it. And so we have committed ourselves. Early morning, we have to come. Look at how stressful 4 a.m. you are. You won't sleep plenty. You will come and learn. But it is also true. If you continue sleeping plenty, you will be poor. So you have to sacrifice. And then you come and do all these things. At the end of the period, you go and sit there and you are not able to make the 50 marks. It will be very, very disappointing. So my people, I beg you, let us work hard. The paper, if you can see, look at the questions we are solving. The questions we are solving should tell you that the management accounting exams is actually not difficult, but you need to be very tactical with your strategies. Have you realized that?
Yeah.
The paper itself, the questions are not difficult, But you need to be very, very tactical with your strategies. If you look at the examiner's comment of this question, let me read the examiner's comment for it. He said, this question was poorly answered by candidates. About 75% of candidates had difficulties answering this question. Can you imagine? 75% of the candidates, they couldn't solve this question. They had three main problems. One, explaining constraint satisfaction and optimizing the theory part. Two, separating fixed costs relating to production overhead and selling overhead using the high-low method. They simply couldn't separate using the high-low method. That is calculating cost per unit for all the factors of production. 3, calculating the flexible budget at the activity level of 82%. Some couldn't do this. They couldn't calculate at 82%. They couldn't also determine the variable and fixed costs in the selling, the production and selling overhead using high-low method. And that was why they failed this question. Now, a 20-mark question gone down the drain simply because students didn't prepare well. So if you lose these 20 marks, it means the whole paper, they are now marking you out of 80. What is the probability that you can score 50? So you see why the results are not coming. I beg you, learn hard, and let us make the grades. Are we fine with this?
Yes.
Are we fine with this? You see? Somebody was speaking. I should go back.
Maybe
I go back.
Yeah, take a snap.
You are taking a snap from where? From the beginning?
Yes.
So from the very beginning?
No, from the MZ, the one we started. We were just following.
Okay, I think from here. From here, right? Is it from here?
That is the first.
Yes.
The solution?
Yes.
No, yes, the first one, May 2015. So take this. Have you taken it?
Yes.
Take this.
This has been already done.
Are you taking it?
Yeah.
Take this. Have you taken it?
Yes, sir.
Yes.
Take this in case. Have you taken it?
Yes, sir.
Yeah.
Then the November 2015 one.
Okay. Then you can flip.
Take this. Are we fine?
Yes, sir.
Yes.
Yes, please.
Take this. Are you okay?
Yes.
Yes.
Then the last column, the variance. Take it. So we've tackled the flexible budget. And then this same November 2019, the question 5, this same November 2019, we have some 14 minutes to 6. Let's look at the question 5 of that. The question 5, let's look at it and then we go question 5. Yes, open to question 5 of that same question. I don't know why they examine budgeting twice this year. Question 5. It says
Graphics Communication Group Limited is a magazine publishing company. It comprises a number of different divisions, each publishing magazines in a different sector. GCCL is now considering publishing financial magazine. The financial magazine market is very competitive with a number of well-established titles already being published by GCCL's competitors. Financial magazine is a monthly magazine. GCGL has therefore commissioned an advertising campaign to launch its financial magazine. The price of the financial magazine has been set at full cost plus markup of 20%.
So the price is a full cost plus a markup of 20%. Okay.
Forecast variable cost per copy of financial magazine. Paper 0.83 cedis. Ink C note 1. Machine cost 0.22 cedis. Other variable cost 0.15 cedis. The following additional information is available. 1. Each financial magazine needs 0.2 liters of ink. However, 10% of the ink input to the printing process is wasted. Ink cost 5 cedi 40 pesos per liter. In month 1, GCGL expects to sell 50,000 copies of the magazine to new customers at this price. 3. After their first month of sale, GCGL expects 90% of the first month's customers to purchase the financial magazine in month 2. After the second month of purchase, GCGL expects to retain 85% of month 2 customers in subsequent months. As the magazine circulation area increases, sales to additional new customers in month 2 will be 20% of month 1 sales figures. 90% of this would be retained in month 3. 4. Sales to additional new customers in month 3 would be 30% of month 1 sales figures. 6. Fixed overhead costs are apportioned by GCGL to the financial magazines based on the first month's sales volume. Total budgeted annual fixed overhead is 18 million Ghana cedis, and total budgeted annual magazine sales, including the financial magazine, is 12 million copies. 7. The sales price of the financial magazine will remain unchanged throughout the first 3 months. Required. A. Discuss 2 advantages and 2 disadvantages of managing directors' pricing strategy in the circumstances described above.
So hold on.
B.
Hold on. So November 2019, question 5. The A, they say 2 advantages and 2 disadvantages of the pricing. Now they say the pricing is full cost plus a markup. Full cost means both the variable and fixed costs. Is that clear?
Okay.
So advantages of full cost pricing. If I choose both variable and fixed costs, what will be the advantage I will enjoy? What will be the advantage of charging full cost? Yes, tell me, what will be the advantage I will get as a result of charging full cost?
Increase in profit.
Yes. 1, profitability is assured. Profitability is assured since total cost has been covered. Are you getting it?
Yeah.
So you are rest assured of your profit. Number 2. It is the simplest method to calculate. You just add the whole cost. Are you getting it?
Yeah.
It is simple to calculate by adding up all cost items. Very, very simple. Then number 3 too, you can use it in a situation where there is no competition. Are you getting it?
Yeah.
Are you getting it?
Yes,
Because if there is excessive competition and you use full cost, your cost will be too high. You know that.
yes.
They say it's often suitable in situations where there is less competition. Then disadvantages. It's how you should give its disadvantages. Do you know it also provides a higher cost? Do you get it? It is criticized due to what? High cost. Are you getting it?
Yes.
Yes. It often
Higher cost.
results
Yes.
in what? High prices. High
Cost.
prices due to high costs, which may deter customers. You know you can deter customers
Yes.
because you are using full cost. Your prices will be high. Then, secondly, what do you think? Please, hey, talk. Don't let me be giving you the answers. So, talk. Bring it to the house. Bring it to the house. A company who is charging full cost. What will be some of the disadvantage? Sometimes they may not even be able to estimate the full cost because some elements they use in production they simply can't cost them. You know that. You know that.
There will be decrease in the demand of
some things you use some things you use in production, it is very difficult to cost them. So if that's your pricing policy, you will always have to spend time analyzing those costs. So you say it is if often impossible to ascertain cost of all inputs of production. For example, some screws that maybe you use some screws to do the thing. Screws that is in your business already. Will you be able to cost it? Some things you cannot cost them. So it makes you give fluctuations. Yes, another disadvantage. You can't use it for decision making because of the inclusion of fixed costs. Are you getting it? Fixed cost is not relevant for decision making. So you say it is often not suitable for decision making. Thank God after budgeting, we'll be going to decision making. So you see, decision making due to the inclusion of fixed costs. Due to inclusion of fixed costs, which is not relevant. In decision making, we will tell you fixed cost is not relevant. When we get there, you understand more. Because whether you produce or you don't produce, you incur it. So it is not relevant. So these will be the two advantages and then two disadvantages. Then the question
Can you
went
say, can you also say it ignores market conditions? Maybe you only
Yes,
concentrate on the
excellent. This is why I asked you to excellent. You see, you say it usually does not consider other factors affecting demand. Are you getting it? Affecting demand, such as what? Changes in
customer.
changes in what? Taste and preference, etc. If you monitor and you realize that customers' taste and preference have what changed, then you need to reduce your price to get them. But if you are still, charging that rigid price, meanwhile the customers' taste and preference have changed, who will come and buy your product? Okay, so that is it. Yes, then the B part of the question says you should produce a statement that shows the total profit for the first 3 months of financial magazine. So the total profit. Now, I told you the last time, in calculating profit, the number of units, splitting the number of units, that's the problem. If you look at the note number 2, it said in month 1, GCGL expects to sell 50,000 copies of the magazine to new customers. Then after the first month, GCGL expects 90% of the first month customers to purchase the financial magazine in month 2. So we can calculate our number of customers. You need to get that first, since they are giving you percentages, like the cash budget. Like the cash budget, you need to take your time and collect it first. So let me put the details here. Then month 1, let me put month 1 here. Let me put month 2 here. And then let me put month 3 here. The question said what? Yes, they expect to sell 50,000 copies to new customers in month 1. Are you getting it? So let me see. Month 1 customers. How many are there? 50,000, right?
Yes.
50,000. Then the question says what? After the first month, GCGL expects to maintain 90% of these customers in what? Month 2. Is that right?
Month 2. Yes.
So 90% of month 1 customers, that what? 90% of
45,000.
that will be 45,000. So let me see,
Yes.
45,000. I put it here. Then it went forward. It says, after the second month, GCGL expects to retain 85% of what? Month 2 customers. So let's finish all month 2 before we take 85%. Go to the next one. It says, as the magazine circulation area increases, sales to additional new customers in month 2 will be 20% of month 1 sales figure. So month 2 new customers. Yes, month 2 new customers, they say what? 20% of what?
50,000.
Of month 1. So 20% of 50,000 will give you what? 10,000, right?
10,000. Yes.
Then he says what? 90% of this will be retained in month 3. Let's finish month. 2. So sales to additional customers in month 3 is 30%. So we finish month 2. Now let's go to month 3. From the beginning, footnote number 3. They say after the first month, 90% of first month customers will purchase the financial magazine in month 2. Then after the second month,
When I finish, I'll come and take for
they
you.
say GCGL expects to retain 85% of month 2 customers. Are you getting it?
I'll come and do.
Are you getting it?
Yes.
Yeah.
So 85% of month 2 customers. Now add all the month 2, 45,000 plus
55,000.
10,000. That will be what?
My teacher is talking. I'm coming.
That'll
That will
be
be what?
46,700.
55,000
50.
times 85%.
Yes.
43,750.
So that is 46,750
750.
at that level. Then let's go to Ivy. It says what? As the magazine circular increase and sales to additional new customers in month 2 will be 20% of month 1. 90% of this will be retained in what? Month 3.
Month
Is that
3.
clear?
Yes.
So they are
Yes.
telling you that 90% of this
The new
10,000, 90% of this 10,000 will be retained in month 3. So calculate that month 3 for me.
9,000.
Are you following? 90% of that. Oh, okay. So we've calculated the 8% in this already. It
Yes.
means, hold on, so that we don't overlap, we don't repeat. Hold on. So the 85%, let's calculate it only on the 45,000 first to give you 38,250. Can you see? That will give you
Yes.
38,250 first.
Yes.
But on this 10,000, they said 90% of the 10,000. Are you getting it?
Yes.
Yeah.
So 9,000.
9,000. So that we don't repeat. Are you getting it? So I've done that. So let's sum them. And then what? The statement said what again? Continue. They said new customers in month 3 is what? Continue reading. Continue reading. They said new customers in month 3 will be what?
Where?
Note V. Sales to additional
Okay.
new
Sales to
customers in
additional
month
new
3.
customers in month 3 will be 30% of month 1 sales figures.
So additional for month 3. 30% of what? Of month 1, right?
Month 1, yes.
So 30% of 50,000 will be what? 15,000.
15,000.
So somewhere, and let's get the number of customers. So somewhere, and let's get the
50,000.
number of customers. Sum them, and let's get the number of customers.
50,000. 55,000.
622.
So this one is 50,000. This one is what? 55,000.
55,000.
And this one is
62,250.
62,250.
62,250. So this is the number of customers. Now let's see. They said the forecast variable cost per unit. Okay. Paper is there, 0.383. Ink, they say C note 1. So let's look at note 1. Each financial magazine needs 0.2 liters of ink. However, 10% of the ink input in the production process is wasted. So it means that at 10% wastage, so if there is 10% wastage, it means what? 90% normal level. So it means 90% is equivalent to the 0.2 they are giving us. Is that not it?
Yeah.
They said the ink is 0.2 per unit, per liter. So if there is 10% loss, it means that, yes, it means it's referring to a 90%. So 0.2 is equivalent to 90%. Therefore, 100% to be equivalent to how much? Do you remember I taught you in functional budget that anytime there is a loss, you gloss it back to 100%. Do you remember?
Yes.
Yes.
Therefore, 100% will be equal to more. If more,
Let's
let's
divide.
divide. So 100 over 90 times
Times
0.2
2.
liters, giving you what? Giving you what?
0.22.
0. What?
22.
0.2.
So that's 0.22 liters. So the ink is 0.22 liters. Yes, let's read further. Apart from that, it says what again? Let's read further. Apart from that, it says what again?
Ink costs 5 cedi, 40 pesos per liter.
Ink costs 5 cedis, 40 pesos per liter. Right?
Yes.
Okay, so now we can calculate the cost of the raw materials. What is the direct material cost? Paper. So let's see. So
Paper
we've gotten the ink.
0.83.
Okay. So let's see. Let's calculate the cost per unit. Variable cost per unit. So the variable cost per unit. Variable cost per unit. Let's calculate it. Paper is what? 0.83.
83.
So paper 0.83. What else? Apart from
Ink.
paper, what else?
Ink.
Ink.
Thank you for it. You worked on
So
it.
ink, which we've worked in working one. Ink give us what?
0.22.
Point what? 22.
Yes.
Okay, so 0.22. What else is there?
Other variable cost.
Other variable cost is what?
0.15.
Okay. But then did they give you individual prices or the price was bulk? For all the
Per
material, did they give
forecast
individual?
variable cost per copy of the financial magazine.
Okay,
18.
so that's variable cost.
Yeah.
Okay, so we have machine cost. Machine is what?
0.22.
Machine is also 0.22.
Yes, please.
And then other variable cost.
0.15.
0.15. So add them and let's get a variable cost per unit. This a minute. Hold on a minute. I'm coming a minute. Give me a minute.
Management, they know you better like that too.
Charlie. You go B. It's just that you just need to set a way of doing it. That's all. Just all questions
I'm
can't
sure
be.
it's also need a lot of time. Like,
Hey,
give it
Charlie.
time.
Yeah, so me, I always attempt the contemporary, budgeting. Sometimes you may even learn the calculation, full reading will come, and then you'll be like, wow. Charlie, I remember July people, budgeting, all the 20 marks were from reading. It was telling you list the steps in budgeting, and I think another question came. It was full reading. And if you get more reading, that one good past the calculation. Your calculation, you don't know the formula. Charlie.
The basics is where we have problems, the basics. Some of these things, I believe if we had very strong basis,
But that's how I always say, manage maybe 46 too. Sometimes calculation be just 60, reading be 40. So if you don't do that, then you just say you go learn all calculations. You go then that be the problem. And you don't get formula as well. Sometimes you go see some flexible, but just simple way you solve though. You go there no boom, brah. You don't know where you start.
No, like this question just worked.
Okay, so I'm back. Let's go. I'm back. Okay, so let's see. So it says, let's read from the beginning again. The first paragraph. GCL has therefore commissioned an advertising campaign and launch its financial magazine. The price of the financial magazine has been set at full cost plus a markup of 20%. So paper is 0. Oh, then that is cedis. No, so we can't do this. This is the ink in liters, but this is the cost in cedis. So you can't add them up. Can you see there is an error? Watch this. The paper cost and ink they've given us, they are in cedis. Can you see they are in cedis? Can you see they are in cedis?
Yeah.
But what we found here is liters. So we are now going to find the cedis for ink. So we've not calculated the cedis for ink. What was the ink cost?
Cost cedis 50 pesos per liter.
Where did you find that information? Each note one,
It's
each
in note
financial
1.
magazine
5
needs
cedi 40
0.2 liters.
pesos.
However, 10% of the ink input in the production process is wasted. Ink cost what? 5.4.
5
So
cedi
now the
40.
cost.
Yeah.
So this is the liters. So you need to calculate the cost.
0.22.
So 0.22 times
5 point.
is what 5.4, eh?
Yes.
Yeah.
Giving you what? What is it giving you?
1 cedi.
1.19.
Giving
No.
1.2, eh? 1.2, eh? Right?
No.
Each
We're running to
financial
one
magazine
decimal place. So
0.2 liters.
Yeah, 1 decimal place, so 1.2.
one decimal place. So let's take it 1.2.
Okay.
Okay. So that's the cost. So now we can calculate our variable cost per unit. So now the variable cost per unit, yes, they've given us all. So mention for me. Paper is what?
0.82.
Paper is 0.83. So now ink, what did we get?
1.2.
1.20.
And then machine.
0.22.
0.22.
And then what? Other variable cost.
0.15.
0.15. When you add them, what is it giving you?
0.23, 1.2 plus 0.22 plus 0.15. It is 2.4.
2 point what?
2.4.
4.
So 2.4 per unit. Now let's find the selling price. They said the selling price is a full cost plus a markup of 20%, right?
Yes.
So let's take the full cost. So the full cost, the variable cost per unit we've calculated here is 2.4, right?
Yeah.
Then the fixed cost per unit, what did they give you? Yes, fixed cost per unit. Let's read. Yes, full cost per unit. Let's read. Did they give us any fixed cost there?
Is this fixed? Okay.
Did they give us any fixed cost?
They are portioned by this.
Fixed overhead costs are apportioned by GCGL to financial magazine based on what? First month monthly sales. Total budgeted annual fixed overhead is 18 million, and total budgeted annual sales, including the financial magazine, is 12,000 copies. So the fixed cost per unit is what we call the overhead absorption rate. Is that clear?
Yes, sir.
That is overhead. That is why those I teach management accounting. Those I teach management accounting. If I'm teaching them, I start from the basics in level 1. I have some set of students I train management accounting. I start from the basics in level 1 because the risk is that some of them are not good in managing these fixed costs and variable costs, OAR and things. So it affects them in level 2. OAR is giving us total budgeted overheads
divided by
the budgeted overheads over the absorption basis.
Yes, sir.
These are level 1 issues. So
18 million.
So they budgeted 18 million cedis, and then the budgeted sales revenue is what, 12 million copies, right?
Yes, please.
Right?
Yes.
So 12 million units. What is that giving you? 1.5, eh?
Yeah, 1.5. Yeah, 1.5.
Good. So the fixed cost is 1.5. Therefore, full cost will be what? Full cost will be what? 3.9 per unit. And they said the selling price is full cost plus a markup of what?
30%.
So 20% markup.
20%.
Maybe
So
20 over 120.
No, it's already on the cost too. It's already on the cost. So it's 20 over 100. It's already on the cost.
Okay, no imagine.
Yes. What is it? 20% of 3.9 gives you what?
0.78.
Hey.
That would be
No.
0.78.
20% of the 3.9.
0.78.
0.78. Okay, so 0.78.
0.78.
So add them and let's see.
4.68.
0.68.
4.68.
So 4.68. So we have 4.68 per unit. So write down your working and then let's close it up. Write down your working and let's close it up. So you can write it from here, from the working one, from here. So you can, so snap it, please snap it so that we can move and finish. It's 6:14, so snap it.
Yeah, we
snap it so that we can move and finish. Have you snapped this?
Yes, sir.
Can we move?
Yeah.
Oh, I'm hearing only one voice. Can we move?
Yes,
Yes,
please.
sir.
Snap this too. Once you've gotten the selling price, the rest is easy. So now, what's the name of the company? Graphics Communication Group, eh?
Yes, sir.
So Graphics Communication Group.
Yeah.
What did the question say we should prepare? It says to prepare what? Budgeted profit for what? Please read the requirement for me. Read the requirement for me.
This produce a statement that shows
the total profit for the first 3 months of financial months.
First 3 months. Okay, so let me take month 1, month 2, month 3, and then the total. So sales revenue. Now we have the selling price to be 4.68. So multiply by the month 1 customers. How many customers are in month 1?
50,000.
50,000. So multiply by the 4.68. What do you get?
234,000.
How many customers are in month 2?
55.
So 4.68 times 55,000, giving you what? 257,400. Can you see? How many customers are in month 3?
62,250.
So 62,250 times 4.68. I'm getting 291,330. Later you can calculate the total. So the variable cost. Have you the variable cost? You have the per unit at what? We calculated the per unit. What did you give? The variable cost
2.4. 2.4.
We got 2.4, eh? So
Yes.
at 2.4, yeah, so multiply 50,000 by the 2.4.
120.
120, eh?
120,000.
How many customers in month 2?
55.
132,000.
132,000.
Yes.
Is that right?
Yes, sir.
How many customers in month 3?
62,250.
That is 150.
Let me hear how many customers?
62,250.
Times 2.4. What do you get?
149,400.
So 149,400. Yes. Then the fixed cost. So variable cost and then fixed cost. Now the fixed cost, they say is absorbed based on what? The first month's sales revenue. So we have 1.5, eh? But the fixed cost was 1.5.
Yes.
Yes, sir.
Times, so 1.5 times the 50,000 gives you what?
75,000.
75,000.
and it's a fixed cost, so 75,000 throughout. 75,000. So calculate the total cost. So sum it and get the total cost. So let's sum this and get total cost 195,000, right?
Yes.
132 plus 75 will give you what?
207,000.
207.
207.
Yes.
Yes.
Then 149,400 plus 75,000.
224,400.
224,400.
400.
This my pen. This my pen. This my pen. 224,400.
Yes, sir.
So 224,400. Okay, so now you can get the net profit by taking the revenue minus the cost. So call the revenue A, call the cost B. So this is what I'm doing. So please subtract for me. 234,000.
239,000.
39,000.
239 or 39.
39,000.
39,000. Then the second month is what?
The second one is 50,400.
5,400. Then third month,
66,930.
66,930.
66. Hey, which figures are these? I see it. To waste your time. Then what?
So
Okay, the total, when you get time, you calculate. Then the last question. Please read the last question. Let's solve it and close.
Calculate the
Calculate the number of copies of the financial magazine that needs to be sold to achieve a profit of 100,000.
So number of units to be sold to achieve a profit of what?
100,000.
100,000. Now this is what we call cost volume profit. You will see it in the next in decision making.
CVP.
It's given by this. So the question said what? So it's given by this. Normally fixed cost plus the target profit. Anytime you want to know the number, it's fixed cost plus the target profit over contribution per unit. Is that clear?
Yes.
You will see next week, you will see this under CVP. So it means you need to calculate your contribution per unit. We need to get our contribution per unit. So contribution per unit, our selling price was what? 4.68, right?
Yes.
And then our variable cost per unit was what? 2.4. When we take it out, contribution per unit is what?
2.28.
2.28.
Yes.
2.28. Therefore, this will give us the number of units to be sold. Will give us the formula, the fixed cost. What is the fixed cost?
75,000.
Sorry, 75.
Plus the target profit. They said we should target 100,000.
100,000.
Contribution per unit of what? 2.28 per unit. Giving us how many units? What is it giving us?
6,000. 6,754 points.
Oh, are you sure? Calculate it well. 75,000 plus 100,000 is divided by 2.28.
76,754.39.
76. So
754.39.
There are number of units, so run it for us.
Yes, so 7675.
Please read the whole question. Read that question again. Number of units to be produced.
Calculate the number of copies of the financial magazine that needs to be sold to achieve a profit of 100,000 cedis.
Okay, so that is 175,000. 175,000 divided by 2.28. So what is it here? 76.
2.28 is 76.754.
76,755. It's the number of units. So even if they're small, you have to run it. It's number of units
Okay.
of items. Oh, 76 what?
7,
754.
5, 5.
76,755. If you read the 542, it will be giving you 76,755 units. So this is it. So when you have time, then you calculate your totals. Is that clear?
Yeah.
Yes, sir.
So we are now left with, so this aspect of the question is a master budget. Anytime they're asking you to prepare budgeted profit or loss, it's a master budget. So we are left with some few questions to solve on master budget. The questions I gave you, how many is left? Yesterday I listed some questions for, we've solved May 2015 and November 2019, question 2 and question 5. So we are left with November 2015 and March 2023. So in our next meeting, when is the next management accounting meeting?
Thursday.
Thursday. Oh.
So Thursday, so on Thursday, to complete our budgeting, we'll be left with November 2015, question 2. We solved 3 questions today. November 2015, question 2, and then the March 2023, question 3. So these 2 questions. Now, there is a question in the question bank. Please listen. For the sake of this bite, I don't want you to have surprises. I'm suspecting something. If I tell you and you listen, good for you. If you don't listen, voila, oh, voila. Now, on Thursday, there is a question in the question bank on budgeting, master budget. There are 2 questions. One is called private medical practice. Private medical practice. Look for that question. If somebody can look for it and give us PDF on the page before Thursday. Private medical practice and 3 services.
Yes, sir.
And 3 services. There are some 2 questions there. Now, I heard from somewhere that if they may give you a master budget, they can pick it from the question bank. Are you getting the point?
Yes.
Now, this question is already in the question bank. This same question is in the question bank. And then this
private
so because,
financial based
so
on.
because
Please, is
I
it the
heard that,
ICA question bank?
yes,
Yes,
the question bank.
Okay.
Because
All
I
right.
heard that they may pick it from the question bank for you. I went back to the question bank and I saw that November 2015 was there, this one was there, this one was there. So as a wise student, if you have heard that they may pick a master budget from there, what you have to do is to solve all the master budget there. Is that not it?
Yes.
Is that not it?
Sir.
It's a rumor. There's a rumor circulating that it's possible they can pick a question on master budget from the question bank. Fortunately for us, the master budget questions there are only 3. The November 2015 question and then these 2. How many minutes will it take us to solve 3 questions? So as a wise student, we just have to solve one and memorize it. If you go and a similar thing has been produced and maybe they've changed the figures, you just take advantage of it and sweep your marks. Are you getting it?
Yeah.
Yes, sir.
So please go and look for that question. Private medical practice. Is private medical practice and then 3 services. Look for those
based on Mount Adeklu.
If you have it, take the screen, PDF, scan it and take PDF and share it on the page for us. Sure. I'm also now going to look for a question bank and get it. But I understand there are 2 questions, the private medical practice and 3 services. Take those 2 questions in addition to this. So when we meet on Thursday, we'll solve maybe we'll be able to solve 2 of them. And then the other 2, we'll reserve it for revision. We'll solve 2 of them. The other 2, we'll reserve it for revision. Then we begin next week, we'll begin with short-term decision making. So the short-term decision making questions, I'm compiling them. I want to make it easy for you. So I'm compiling them. By close of today, I'll forward it to you on your page. It's a whole compilation, about 20 questions on short-term decision making. I've compiled all the plenty. So I'll share it for you as PDF so that you can print it at once. Is that clear?
Okay.
So once you print it, we'll just be solving it question after question. Once we finish that, we look at variance and then you'll be good to go. So I think we've had a good day. Make sure you train and practice well. Is the lesson okay? Are we okay with everything?
Yes.
Right.
Please, those who took their screenshots, can you share them on the platform? Some of them.
Yes, please, those who have been taking the screenshot, do us favor by sharing the PDF on the platform so that others can follow. When you take it, share it for us because at least others Others were not able to join. Not some people close from work late. In fact, when they sleep, they can't wake up at 4. So try and safeguard them. Let us keep on like that. And so we will meet again on Thursday. Until then, may the good
Bishop,
God
please,
guide
are
and
you the one
protect all
that
of us.
shared the link on the platform?
Yes, I shared
The
the link.
WhatsApp. Okay,
Yes.
because I think I solved some question and I sent it to someone thinking it was you, but I didn't get a feedback. Yeah,
Oh, if
so
it was me, you'll get feedback. I don't think I'm the one. So
yes,
refer and check.
yes, so I'll reshare it.
All right. So we'll meet again on Thursday. Let God guide and protect all of us till we meet. Good day.
God bless you, son.